Welcome back to The Explainer. If you've been paying any attention to the markets lately, you already know that investors are absolutely laser-focused on the nuclear energy sector right now. I mean, the renaissance is real, but let's be honest, separating the hype from the actual investable reality, that is the hard part. So today, we're doing a deep dive into one of the most talked about players in the entire space, NuScale Power, ticker symbol SMR. We're going to break down their Q1 2026 earnings call and comb through that heavily detailed FY 2025 10K filing to see exactly what is going on under the hood.
All right, let's just jump right into it. Here is our roadmap for today. We're going to hit the nuclear market opportunity, NuScale's competitive moat, their financial health and liquidity, the commercial project pipeline, key investment risks, and finally we'll wrap it up with a bull versus bear summary.
Okay, Section 1, the nuclear market opportunity, or as we like to call it, the baseload imperative.
Before we even look at NuScale specifically, we really have to understand the macro environment driving this massive surge in nuclear demand. I mean, why are investors suddenly hyper-focused on nuclear energy right now? Well, the answer is kind of hiding in plain sight. It's data centers and artificial intelligence. These tech giants and hyperscalers are building out AI infrastructure at a scale that is honestly unprecedented, and these facilities require massive, uninterrupted 24/7 power. You just cannot run a Tier 1 data center on intermittent energy. It doesn't work. So the power grid is desperately turning back to nuclear because it's literally the only zero-carbon source that can reliably meet this surging baseload demand day in and day out.
And that brings us to the technology itself. For anyone new to the space, what actually is an SMR? Well, it stands for Small Modular Reactor. Unlike those traditional, massive, custom-built nuclear plants that literally take decades to finish, SMRs are designed to be manufactured in a factory and then shipped directly to the site. NuScale's specific design generates 77 megawatts electric per module. And what's really cool is they use passive safety features, meaning they don't rely on those traditional massive coolant pumps to safely shut down. Plus, they can be grouped together, scaled up to 12 modules per plant. So you right-size your initial capital investment, and then you just scale up as your power needs grow.
Now check out these numbers from 2024 from the Energy Information Administration. We're looking at energy capacity factors, which is essentially a measure of how often a plant runs at maximum power. Look at nuclear. It sits at an absolutely unmatched 92%. Compare that to natural gas at 60% and coal down at 42%, and wind and solar, they're even lower. So when investors are looking for a reliable, carbon-free energy source to power the future economy, statistically speaking, nuclear is just completely unmatched.
Moving on to Section 2, NuScale's competitive moat, the regulatory head start.
As investors, we're always looking for a solid moat, right? Well, NuScale's primary competitive advantage isn't just their engineering. It's actually their massive regulatory head start with the U.S. Nuclear Regulatory Commission. Look at the timeline. They were founded back in 2007. By 2020, they got their first standard design approval from the NRC for their 50-megawatt design. But the real game changer happened in May 2025 when they secured a historic second SDA approval for their upgraded 77-megawatt module. The absolutely crucial point you need to take away here is this. NuScale is currently the only SMR with an NRC standard design approval. Any customer in the US can now reference this pre-approved design, which massively expedites their own construction licensing. That's a moat that literally takes competitors years and hundreds of millions of dollars to cross.
But hey, a design is just a piece of paper if you don't have a way to build it, right? NuScale has spent years building out a supply chain moat as well. They're already executing a multi-sourcing strategy for critical components, which is huge for de-risking single-source dependencies. They're advancing their fuel fabrication design with industry heavyweight Framatome, and perhaps most importantly, key module components are already in active production with Doosan and Validity. So they aren't just talking about building these modules. They are actively procuring the long lead materials right now.
All right, let's look at Section 3, financial health and liquidity, or what management likes to call their fortress balance sheet.
Look, for pre-revenue or early-stage commercial companies, the balance sheet is basically everything. So let's look at the financial realities from their Q1 2026 earnings. If you just glance at the top line, you might actually do a double take. Revenue dropped from $13.4 million in Q1 2025 down to $6.0 million in Q1 2026. But since we do our due diligence, we read the fine print, this drop is really just a transition effect. See, in 2025, NuScale recognized a bunch of revenue from completed technology licensing and engineering design phases for their RoPower project in Romania. So that Q1 2026 drop simply reflects the gap between those early licensing phases and the actual equipment manufacturing contracts that are still to come.
But guys, the real story here is this number, $1.2 billion. By early May 2026, NuScale reported a massive $1.2 billion liquidity position. So how'd they get it? Mostly by aggressively utilizing their at-the-market equity programs throughout 2024 and 2025 when their stock price was surging. Basically, they sold shares into the open market to stockpile cash.
The philosophy behind that massive cash hoard is actually super interesting. CFO Ramsey Holiday put it this way: "We've really positioned ourselves with this fortress balance sheet because we don't know what's around the corner." Now, NuScale did burn roughly $55 million in operating expenses this past quarter, and management fully expects that burn to go up as they near commercialization. But they are actively choosing this highly conservative cash strategy just to insulate the company from future macroeconomic shocks or project delays. It's a real safety net.
Section 4. The commercial project pipeline and the key catalysts we need to watch. Having a great design and a ton of cash is fantastic, sure, but we need to see how this all builds toward actually deploying reactors and generating real product revenue. For us investors, it is absolutely vital to understand the complex steps of nuclear commercialization. A prospect doesn't just wake up and buy a reactor on day one. First, they pay for pre-FEED and licensing services. Then they secure a power purchase agreement, or PPA, which ensures they actually have a buyer for all that electricity. Only after that do they sign an OEM contract with NuScale to actually build the modules. And then finally, the project reaches a final investment decision to begin the heavy construction. It's a long process.
So let's look at their two flagship pipelines side by side. We've got a massive domestic opportunity right up against a highly advanced international one. Domestically, NuScale's partner Entron is advancing toward a definitive PPA with the Tennessee Valley Authority for up to a staggering 6 gigawatts of power. That's huge. Internationally, the RoPower project over in Romania just saw its government approve the investment decision. They're currently seeking financing for a 15-month pre-EPC engineering phase. Both are major catalysts, but as you can see, they're at very different stages of the funnel.
And here is the ultimate financial catalyst we all need to be watching for: signing the OEM contract. Management explicitly stated on the earnings call that upon signing the equipment OEM agreement, specifically once they start taking in those milestone payments, they expect the cash burn to finally end. That would make them operationally cash flow positive. Make no mistake, that is the holy grail milestone for NuScale stock.
Section 5. Time to talk about the key investment risks and face the 10K realities. Look, we cannot do a proper due diligence explainer without digging into the 10K risk factors. This is where the mandatory, often sobering realities of the business are fully disclosed. Impartially speaking, despite all the enormous hype around this company, NuScale still has 0 binding contracts to actually deliver their power modules. None. Second, they are heavily dependent on their strategic partners, Entron and Fluor, to actually close these deals and build the plants. Third, they still have to prove that their levelized cost of energy can actually compete with cheap natural gas in certain markets. Fourth, if there's a massive global rush for nuclear, it could cause some severe supply chain bottlenecks. And finally, their partnership milestones agreement with Entron actually triggered a massive $247.5 million cash outlay from NuScale back in 2025, so they are paying heavily to secure their place in these future projects.
All right, Section 6, the summary. Let's weigh the bull versus the bear case.
Let's pull this all together by contrasting the two extreme viewpoints we found in the source material. On the bull side, the case is undeniably strong. NuScale has unmatched NRC regulatory approvals, a massive $1.2 billion cash runway that totally protects them from near-term dilution, and a mammoth 6-gigawatt pipeline with TVA that could absolutely validate their entire business model. Now, on the bear side, the case is grounded in some harsh current realities. The company is burning high levels of operating cash, they still lack a single binding delivery contract for an actual reactor, and their entire go-to-market strategy relies extremely heavily on third-party partners executing everything perfectly.
Which leaves us with the ultimate question for your portfolio. Is NuScale's historic regulatory head start actually enough to win the global SMR race? I mean, they've got the cash, they've got the approved blueprints, but the execution of that very first binding OEM contract, that's going to be the true test. I hope this due diligence explainer gave you the structured insights you need to really understand NuScale Power. Keep a close eye on those catalysts, stay objective out there, and we'll see you on the next explainer.